I see a lot of people kind of, sharing your 13Fs and things and referring to you as the master of doing nothing. I think maybe not quite rivaling Charlie, but, you know, aspiring to that level, I think. And I can see that maybe those past experiences have kind of seared that in. I know you're an extensive user of checklists as well. Are those experiences you just described, was that sort of the genesis for setting up investment checklists also?
Um, so one thing is that people are focused on the 13 Fs, but they're not aware of what I have outside of the
Sure.
US, which I'm quite happy not to share. I
Fair
don't have
enough.
to. And
Fair enough.
but for what it's worth, you probably, if you look in India, you'll see me as showing up as a shareholder, at least in a couple of companies. But interesting enough, I haven't made any moves there either. So the portfolio has stayed pretty static through this period. I think that, I actually a big change for me is that my letters can now be read by everyone. So you're welcome to go read those letters. And I think that, I'm almost hesitant. It's not that I'm hesitant. This is kind of like the big secret for me, or a big secret that's been revealed to me recently, is that William Green, in talking about Nick Sleep, in Richer, Wiser, Happier, talks about destination analysis. Look at where you want to end up and then rewind from there. And I think that there are so many businesses that I've watched friends of mine own where I just say, I can't see the destination. It looks really sexy right now, but what's the destination? And if the destination is not somewhere that I want to be, then I'm not going to invest in it. And I just have to take a mating analogy, human mating analogy. So, if, I don't know, are you single, Tom?
No.
You're not single. Are you married? You married?
No, I'm not
No?
married.
Okay. Partnered up. So, but the thing is that I experienced when I was way younger, maybe many of us have experienced the thing of the one night stand or the drunken night in a bar. And then there's a kind of the wolf syndrome where you want to bite your arm off because you find your arm off underneath somebody that you really don't want to be around the next morning. That is an example of not engaging in destination analysis. An example of engaging in destination analysis is to only hang out and certainly only go home with people you'd want to spend the rest of your life with, because then the destination is a positive destination. You never ever in investing want to wake up and discover that the thing that you thought you were getting married to really ought to have been a one night stand. And so every single company, and I've done this with companies where people say this is a spectacular business and they're making so much money and they're not that expensive. And my answer to them is yes, but I don't know where the end point is. I don't know where they end up, and I want to know where they end up. And when every single company in your portfolio is one where I can see my way to an endpoint that is a good and positive endpoint that I want to be in, then that's something that you want to own for life. That's something you want to be married to. And so people in this period are waking up to use the analogy that they took home somebody as a partner, and then they're waking up the next day and it ain't looking so good anymore, and they want to chew their arm off. And what you really want to do is make sure that whatever company you take home with you to get is one that you actually want to get married to. And every single company that's in my portfolio, I want to be married to that company effectively. And so why would I change? And I, it's actually, the letter was really, really well timed, because I talked about going into inflation and higher interest rates in a time of extraordinary uncertainty. And I asked myself, and I asked the reader, where do you want to be as you go through this period? And the answer, and I reasoned through to an answer, which basically says, you want to be in these businesses. And, maybe there's a selection of the businesses that you want to, this is where you want to be. And, just very briefly, I used the analogy of, if we just imagine all stock investing is real estate, if you already own the best real estate in town, you own the best office building, you own the best McDonald's franchise, you own the best shopping mall right down there next to Trump Tower, let's say, and the storm is coming, whatever it is, do you really want to go and buy warehouses on the edge of town? Do you really want to sell your real estate and buy and hold cash or anything else? Or do you want to continue to own? Sorry, there's something in my throat. Hopefully that takes care of it. Or do you want to own the best assets you can possibly find? And my answer is to own the best assets I can possibly find. And so that's why there's zero portfolio turnover. In terms of checklists, I don't think that the checklists have helped me to lower my portfolio turnover. I think it's really this concept of destination analysis, knowing where you want to end up and not doing anything that is inconsistent with that outcome, which basically means that 98% of possible actions in the stock market are ones that you end up not taking for that reason. I'll give you one example that, and I hope I'm not pouring fuel on a burning fire, but if I was a trader type, what I'd really like to do right now is short Tether, because I think that in the crypto world, and I know I've just made a whole bunch of crypto enemies right there. but the destination, there's no conceivable good destination from that, so I'm not going to do it for all sorts of reasons. But there are many examples of that. I was I was looking at a company called Basic Fit. Basic Fit appears to be a phenomenal business. They run low cost gyms in Europe, and it's really well managed, and it's a good business. It generates a lot of free cash, and it's got scale economies, and they're going good places. And the valuation was suppressed because all sorts of growth aspects of the growth of the business were heavily dampened by COVID and lockdowns. But I don't know where that business ends up. I don't know what happens to health clubs in 20, 30 years. Maybe we're all working out at home. I have no idea. So it's just a no-go for me, even though I'm probably going to leave, at least for a 5 or 6 or 10 year period, a lot of money on the table. And I think that something that really, this is another one of the reasons why we go to the Berkshire Hathaway meeting. So during the financial crisis 10 years ago, I discovered that Berkshire Hathaway had loaned money to Harley Davidson. And Harley Davidson was a brand that I really like. It's an iconic brand. There's this wonderful statement that if any brand that gets tattooed into people's arms is something that you want to own. I mean, that's kind of pretty amazing. And then it was just phenomenal for me because the shareholders one of the shareholders asked the question. They asked to Warren and Charlie, we saw that you had bought some kind of debt issuance of Harley Davidson. Did you consider buying the equity? And I kind of at the time would have thought that Harley Davidson would be the kind of brand that Berkshire Hathaway would love to buy. And Warren said something along the lines of, we're not so sure where the brand ends up, but we felt pretty confident that the debt was well covered and safe, and it was offering a nice rate of interest. And, so I think that Warren, again, there's no lesson that I've learned that I don't realize that Warren hasn't already learned it. And I think that he was engaging in a kind of destination analysis. And it's not enough for Warren to say, to enjoy the idea that it's tattooed into people's arms and it's a well-known brand. No, he really thinks through to saying, is this something that will be around after the flood, after the apocalypse? And I think that his conclusion was no, but the secured debt was something that was okay to invest in, but the equity was not. And so one should have extraordinarily high standards about that destination. Now, the reason why I was hesitant is that I don't want everybody to think that way, because that will take away opportunities for me. But we have to be open, and we have to teach, and we have to be generous. So I'm doing it for that reason. And I realized that half of the, something I learned from Monish, you can give your secret sauce away and people still won't implement it in their own lives. So, and the world is big, but yeah, so that's really the reason why there's zero turnover. I like what I own.
If you enjoyed this clip, check out the full episode here and subscribe here. Thanks for watching.